Okay, thank you. Okay, good afternoon. I'd like to call a special called board meeting of Kentucky Retirement System on December 17th to order. And with that, Vicki, will you read the legal public statement?
Yes, ma'am. For the record, I want to note that this is a special called meeting of the Board of Trustees of the Kentucky Retirement Systems. This meeting is being broadcast via video teleconference pursuant to Kentucky Revised Statute Section 61.826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road, Frankfort, Kentucky. It is also being broadcast to the public via Facebook. I ask if you are speaking and not appearing by video, please identify yourself before talking. In the event the video or audio broadcast is interrupted, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to another date.
Okay, thank you very much, Vicki. And Sherry, the roll call, please.
Yes, ma'am. Ms. Hampton,
Here.
Mr. Atkins, Ms. Bova,
Here.
Ms. Eves,
Here.
Mr. Lane,
Here.
Dr. Miller, Mr. Piercy,
Here.
Mr. Summers, and Ms. Thompson.
Here.
Thank you.
Okay, we have a quorum. And Sherry, is there any public statements?
No, ma'am, no public comment today.
Okay, comment, sorry. Okay, so with that, we'll go to the agenda, and the agenda is to discuss a real return investment, and I'll turn this over to Pruitt.
Thank you. And I want to thank everyone for taking their time. Some of you were here on the previous meeting, and we'll try to keep this one in the summary form because we're here to ratify the vote of the investment committee. All the members of the investment committee voted yay on this investment. And so I'll turn it over to Steve to give you the summary version, and Anthony has done a lot of the legwork. So any deep questions, Anthony will definitely be able to answer them.
Thank you, Pruitt, and really appreciate everyone's time and flexibility today. So we just discussed this investment opportunity, as Pruitt mentioned, at the investment committee meeting. Give you a very brief overview, both kind of the investment and where we are from a portfolio perspective, and then open it up to questions. So as we discussed at past meetings, staff is very constructive view generally on transportation assets as real return investments, and we've been actively exploring several alternatives, which would be complementary, especially to our barge leasing investment that we made last year. And so this opportunity that Anthony deserves all the credit for sourcing is a great opportunity. It meets all of the criteria we look for when we evaluate real return investments, which is compelling economics, favorable standalone risk-adjusted returns, low return correlations to our current real return investments, as well as to our overall broader portfolio, provides inflation sensitivity and meaningful diversification, and also provides yield and current income from contractual cash flows. Sherry, if you could move forward to page 4, please. That one's good. Sorry. Yep, perfect. So this is a snapshot of when we're using the KRS pension portfolio as a representative of current allocations. With on the left here, we have at the IPS asset class level, we can see that we're currently very close at an overall level to our target allocation. On the right is a breakdown of where we are currently within the real return asset class allocations. We can see we have a lot of proxy assets. Those were put in place when the IPS was changed. And we also, as we've discussed in the past, the portfolios were structurally underweight broadly the real return asset class for a number of years, as we really found limited opportunity for compelling risk return, especially relative to other asset classes. So we've been working hard over the past 12 to 18 months. As we've seen, we've brought forward several investment recommendations in the real return asset class that have been approved and ratified. Managers are in the process of calling that capital and deploying that capital, investing that capital. And so our goal is really to build a resilient diversified allocation within real return. From a sizing perspective, this recommendation would represent about 100 to 110 basis points of overall portfolio, which we think for real return, when we size investments, we look at the volatility and we look at the volatility relative to the expected return. And as the material demonstrates, this has been a very stable asset class, or this fund has been very stable within the asset class. And we think that's the expectation going forward. Sherry, if you go forward one page, please. So overall, if we looked at all of the capital, so this graph on the right is all of the capital that we currently have committed to real return managers, as well as if we were to commit capital and it would be called from this new fund, this is what the allocation would look like for our real return portfolio. And we would be very near target. Again, we still have some proxy assets that we would unwind to fund both as capital gets called by other managers, as well as to fund new investments. So over time, we've been winding down those proxy investments that are kind of placeholders in liquid alternatives. And as we can see, if we do this investment is ratified, so the rail fund would be about 11% of the overall real return asset class, which again, I think that's a durable, resilient portfolio that achieves all of the characteristics we look for in real return asset classes. So with that, I'll turn it over to Anthony.
Yeah, can we go to the next page, please? Yeah. So just a quick high level, this is a rail fund. It has about 120,000 rail cars that it leases to over 1,000 lessees, and they carry over 500 commodities. So it's a very diversified fund. It's been built slowly over 10 years, primarily with 3 large acquisitions accounting for a decent amount of the growth, but they've also just steadily taken some production from the manufacturers as well when the economics are compelling. It's not a build it and hope people will lease it. It's they build it to when it makes sense to do that, and they have the utilization both for IT and the industry is extremely high, much like our large leasing investment. And so those are some things that we find very attractive. And so the income return is definitely compelling. On an unlevered basis, you would get the cost back in 8 to 12 years with the leverage that this fund does use. It's within the lease term, the first lease term of 4 to 7 years. And these are for assets that are multiple decades, so up to 50 years. So there's quite a bit of cash flow and also residual value that is in these rail cars. It's not something that I think as Steve said in the previous meeting, is someone that you can just be a tourist in. Yes, you can come and buy some, but then you also have to have someone service them and maintain them. And that obviously is not a usual thing that people like just financial buyers do. So the IT has been an interesting and compelling combination of both folks with financial expertise and also operational expertise that they have. And so that also helps them keeps the cost down compared to other financial players that they're also finding the opportunity very compelling for income and rental and basically steady utilization and income for themselves. So we've followed this for several years now. They've scaled it over time and are at a very compelling point now where they're one of the top 3 owners of rail cars in the United States. And they've as some folks have exited the business, including banks, which have historically been involved, and other players, they have been able to add to the fleet in an attractive basis, and then also utilize the operational capabilities they have to continue to produce returns for investors. So that's what we've found compelling about it. We're happy to take any questions, or if Steve has more comments, either way.
Yeah, the only thing I would add, and I did mention this in the last meeting. So again, kudos to Anthony for sourcing the investment. So with an acquisition that the fund made, they essentially closed fundraising, meaning that it was essentially closed to new investors. But through Anthony's efforts and his persistence with IT, staying engaged, he positioned KPPA as a frontline investor option should an opportunity arise in the fund. And that's the catalyst for this opportunity we're presenting today. And that's the timing element. As Pruitt mentioned in the last meeting, there is a year-end timing element to this, but from a capital being committed and called, we would expect this to be on the shorter side of being fully called, whatever capital we do commit to the fund. And so we think it's a very compelling opportunity.
Did we discuss how much capital we're committing? Has that come up yet?
So the recommendation was up to 100 million. And that is obviously with successful negotiation of legal documents. Always that caveat.
And what was that percentage? I remember the pie chart, but at the beginning, but I didn't.
So it would represent about 100 to 110 basis points of exposure at the overall fund level and about 11% of the real return asset class once all capital is fully called.
Got it. Thank you.
You're welcome.
And if I'm not mistaken, Dr. Miller, you're probably one of the only ones on the call that is the first time you're hearing this. So let me see if you have any questions.
Dr. Miller is not present.
Okay.
But I will say that that Mr. Atkins did come on the meeting during the presentation, so I will notate his attendance.
Okay, great. And Mary, did you have any questions?
Yes, Steve, will we be a limited partner, or what is our?
Yes.
We would be a limited partner in this. And how many limited partners do they have? Approximately.
Let me find
Anthony,
that for you.
Yeah.
Yeah, let me find that for you. Sorry. They have a lot. This is a product that has that is very attractive for high net worth taxable people because of the depreciation characteristics that this has. So they have a lot of smaller clients. So the number is actually quite can be quite big, but in terms of there's larger ones. There's a couple pensions and a wealth management shop that are the larger investors that would be on the advisory committee along with us. But let me find you the actual answer for you.
Yeah, the structure going forward. So this is obviously, as Anthony mentioned, this fund's been open for a little over 10 years. The structure for the firm going forward is they also have a diversified fund that is now an investor in this fund and provides capital to this fund. That was part of what the closing of the fundraising was as well.
And did I understand, Anthony, just then that we will be part of the advisory committee?
Yes.
Can you explain that? It sounds good, but I don't know what it means.
Sure. It's more of it's often a thing when there's if the fund is going to make major moves, they usually keep the larger investors apprised of them. The advisory committee also can advise on conflicts that can happen. It's more common in private equity that we've seen where sometimes they do the continuation vehicles like the energy and the toll road ones we did earlier this year. Yeah. And the manager is selling the asset from one vehicle to another one that they own that they're also going to be controlling. So that's a conflict. And so then proposing that and making sure the terms are favorable for everybody is something that the advisory committee usually opines on. So those are in the open-end funds probably less. There'll probably less of those. It'll probably just be more, in case if they go into different areas of the market, then maybe they talk about that with the committee. But yeah, that's often what their role is to opine on potential conflicts, and obviously they can give feedback that's not something that the investors are favorable on, and sometimes that has weight, in the relationship with the manager.
Okay, thank you.
I'll just add, this is David, just add to that. It's a good opportunity to be a bit closer to the ground on the investments and what's going on, as Anthony described.
Yeah, it sounded interesting. Okay, are there questions?
Yes, Lynn, it's Mary. Steve, a couple more. Is there a planned exit strategy and a timing, and would we commit I understand we've got up to 100 million committed in capital. Do you expect that to be called fairly soon?
Yeah, in speaking with the manager, part of the catalyst here is there's an immediate the sizing is to be determined, but there's an immediate call on capital that we is by the end of the year. And then we expect in the first 2 quarters of next year, Anthony, that's probably, again, it's going to be market contingent, but they have a pipeline that they would anticipate calling our capital fairly quickly. So I would expect over the coming quarters. It's an open-ended strategy, which is actually beneficial given, as Anthony mentioned, the life of the assets themselves. It's a good alignment of asset life, so they don't need to look for exit of assets. So there is liquidity provisions in the fund. So, again, that's part of what is an opportunity for us to invest here. There are liquidity provisions in the fund as cash flow. So, we would be essentially, it's an evergreen, and the term would be until we elected to make a decision and no longer invest in the fund.
Thank you.
Okay, to close things out, there's over 1,000 LPs. The top 5 comprise 32% of the assets. So, with the largest investor being around 11% of the fund.
And what's the largest investment? What's their upward capital?
It's probably in the range of what we are doing. So I think 11% of 3-ish billion is probably 300 million or so. There's a couple of large public pensions that are investors. I mean, they're public, so it's Florida and New York Common. So they are also investors right now.
Thank you.
Mm-hmm.
And Ms. Eves, there's an annual liquidation offering after a 2-year lockup. So there's an initial 2-year lockup with this, and then after that, there's an annual period of time for which we can have the liquidity.
Right. So yeah, it's similar to the farmland funds and farmland fund in the barge leasing fund we have. It's usually once a year you need to submit your notice by 9:30, I think it is, from I think maybe all the funds, but you submit by that. Actually, the farmland and this one are 9:30, and I think maybe the other one might be your anniversary of commitment. I'm not sure, but either way, there's annual liquidity provisions that you elect, and then obviously they will repay you in short order. I mean, it's the language in the documents give them flexibility, but yeah, they're compelled to provide your money back.
Okay. Anything else before we have a motion? Well, is there a motion to ratify the investment committee's recommendation to invest up to 100 million in the ITE Rail Fund LP, subject to successful contract negotiations?
So moved.
Thank you, Dave. A second?
I'll second.
Thank you, Pruitt. Okay, any further discussion? All those in favor, please say aye.
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 Any opposed? The motion is adopted. Thank you very much.
Thank you, guys.
Thank you. Appreciate the time.
Is there any reason to have closed session today? I checked with Michael and we didn't have anything with Michael. So with no closed session, I want to again thank Steve and Anthony and the investment committee. I really want to thank Sherry for having to
Yes, thank you.
move very fast. And she's had to do that a lot recently. So Sherry, thank you very much. So with that, the meeting is adjourned.